Now, more financial statements for the full year 2024 continue to trickle in as investors eye the month of February to decide on their next action. Now, this week, Total Energies and Aradel Holdings are among the latest tickers, recording over a 100% growth in profit in the full year 2024. Muktar Mohammed, Analyst at Assar Investments, joins me now to unpack the numbers, key performance drivers, and expected stock price movements. So, Muktar, thank you so much. Always a pleasure to have you with us. So, we've had a raft of earnings that hit the market since last week. We've had quite a number this week. Total Energies, of course, Aradel Holdings. Talk to us. Which of the how excited are you? Well, you look excited. So what about, let's start with Total Energies and then Aradel Holdings. What about the numbers?
Well, for Total Energy is good, but it's, the difference between the third quarter and the fourth quarter is not really huge like that. In terms of when you go back to the earning per share, you look at the sale volume improved, but again, the earning is still almost what we had in the third quarter, even slightly. But when you look at Aradel, that's where the big movement.
Yes, 162.7% growth in revenue.
And also an increment in earning per share of 351%.
Right.
From 12 naira 50 kobo to about 50 naira.
Wow.
So that was huge. And I think before I came to the studio, it was on beat. I was selling about 590, but then went to 587 naira before I touched down. So I don't know what the closing price must have been at the end of the day. But that is good for the market, especially this time we are now having the petroleum sector. The real players listed. If you look at the Aradel, we are not looking at just the marketing arm like what we're seeing in Total Energy, but you see that, you see the crude oil sales, you see the other these are tickers of the economy. And you must also look at Aradel that we've not even seen. You remember they are part of the Renaissance group that have got the assets of, I think it was one of the major oil company that was divesting. That has not reflected on the market yet. So you could just imagine, that what we saw in Owando, when we saw that reflection, we saw the part by about improving it by about 5,000 barrels per day, and you saw what that did to the number. So with Aradel, I think it's a stock that investors are really bullish about in the long term.
Are we seeing this sector rivaling, given the banking sector a run for its money this year? Is this going to be
I think it should give the banking sector a run for the money, but again, you need to look at what are the stocks that are listed in that space compared to the banking sector, where you have up to like 15 to 20 banks listed. But in that sector, you still have the big player. You have Seplat, you have Aradel, you have Owando, and then you have Total Energy. Then you have the like of Eternal Oil and others. So it's a sector that is still improving. What will they give a big right? Maybe if we have the listing of Dangote Refinery and also NNPC, that will be a game changer.
Well, that would be something for the market. I mean, I'm looking at others like Unilever, for instance. I mean, Unilever, I see Cadbury revenue up 61% at 129.1 billion. Well, loss down 47%.
Yeah, but again, look at it. We've seen improvement.
Yes.
They made profit in the third quarter. The losses that you've seen, they've reduced their losses by 47%. That is huge. So in just a quarter, they just made a profit in the third quarter and reduced their losses by 47%. Now, what the challenge with those stocks is that people are not looking at what's really driving those losses. It was just FX. It wasn't that there was profit. Right. Now we have, like I normally say, we are in a corridor of stability in the FX market, whereby we're seeing it over between 1,500, 1,600. So that is good for them compared to when they released those losses. You saw the movement about 1,700, 1,800. So when you look at those stocks that have suffered those losses, you can see they are gradually coming out of the wood because of what they've done. And then that's why investors are bullish that by the time we get the result from MTM Nigeria with the tariff increment and then the stability in the FX market, most of these companies that have suffered huge losses, even Guinness also, you could see that
I was
also.
going to mention Guinness just now. Profit up 61% to 44.7 billion.
You can see how they are coming out of the wood gradually because of the FX. There's a little bit of stability in the FX market.
Outside of the FX issue, I mean, what does this also say about the economy? Last year, 2024, was a very, very difficult year for the consumer, for companies, for everybody involved, and yet we're seeing these numbers. What does that say about the?
Well, it tells the economy is resilient. It's a very resilient economy. That's one. And then again, you need to look at the economy. Economy is like the life of a man. You have your ups and you have your downs. But if you are, you definitely get to the point whereby it can only go up. So when you see those economic challenges, it creates opportunities. But now, depending on which space you are, at the time that this opportunity will come.
But when you look at a company like Guinness, those companies, fast-consuming consumer goods companies, who are, of course, whose profits are sort of directly tied to the pocket of the consumer. We saw the consumer, well, should I say trying to spend less last year. Well, everybody had less to. Well, a lot of people had less to spend last year because of inflation and all of that. But yet, the numbers.
No, if you look at the Guinness story, you have to know. You remember they have new investors,
right?
So that could also be a game changer. They've tightened up some.
I'm even talking beyond Guinness. I mean, the consumer goods companies.
When you look at the consumer goods company, I think the positivity that we are seeing is the festivity period. You might not see those high in terms of purchase, but then there's still purchases. Nigerian like festivity. I mean, there will still be room for festivity in terms of people will still do what they have to do. Maybe not at the percentage that they used to do. But again, when you tie that in, you see that volume might come down in terms of consumption, but forgetting that price has gone up of those goods. So you see value coming up, volume coming down. So what you tend to lose in terms of volume, you tend to gain in terms of value. And so that's what is playing out in the numbers you are seeing in these companies. All
right, we'll leave it there, Muktar. Thank you so much for talking to us. Always a pleasure to have you on the show with us. Thank you so much. Muktar Mohammed, analyst at Assar Investments.